morning, traders. Alla Peters at 1:50 EST on January 30th. This is chart that's been present in the trading room for weeks. These are proprietary Fibonacci levels, proprietary Fibonacci strategies I developed in 2008 that show you very, very clearly in advance this is not the place to buy. Everyone seeing this? This is reversal zone where market sold off on January 24th, on January 17th. Everyone seeing this? And if I convert this chart to any day trading chart you choose to trade, here is 5. Exact same formula remains. Fibonacci levels identified weeks in advance in a play at the time of the most important financial news in US in 9 minutes. What is the price showing to us? This is trend inception, reversal zone. Do not short near. This is a place where you monitor for bullish trades. This is key Fibonacci resistance. Do not buy near. This is where you monitor for shorts. This is the start of bullish trend. This is the start of bearish trend, where market started selling off before FOMC as price had done for weeks. If I convert this chart to 15, exact same formula remains. Market is flawless Fibonacci puzzle. And this is what we identify in every mastery course every single Thursday, as we've done weeks prior. So, what's absolutely essential and crucial to remember? As a day trader, what are you monitoring for? This area for shorts, and what are you understanding extremely clearly? This area for longs. What else is playing out in this place, and what are we really, really excited to see? And what would the amazing place to be? 2600 number. Why? It's institutional trend inception that played out in the trading room. If you remember, on that very beautiful and very powerful January 17th. So, if price will collapse to this institutional trend inception and rates are not raised, it's ideal. If price is here, overextended bullish rally, what is the problem? Every single man on the planet loves to short the markets. The only problem right now, buyers remain in charge. If this support respected, it's a problem. So, we are pretty darn high. This is where market sold off this morning in the trading room, as you saw flawless trade formed. And this is where buyers stepped in again, confirming buyers in charge. So, no matter if rates are raised or not, this is a problem. Do not short near this support. Price respected this support for the last 3 hours. Were spectacular shorts, and what are you monitoring for? Shorting here. Only if rules are met, you can take a trade. What would be a problem? If price is in correction in the middle of the trend, this is the worst place to be. If you've been falling asleep the previous few days, that's exactly why. Middle of the trend, the worst place to be. So, extreme caution traders, at the time of FOMC, price can collapse 20, 30, 50 points. Knowledgeable trader never, ever, ever entering the trade into FOMC, ever. It will never work. Don't do that to yourself. Remember, every single stop is a market order. 3-point stop can become 30-point stop. Don't use greed and ego. Control your instant gratification, and if you do, allow price to settle down, and only when rules are met you can take a trade. So this is day trading charts that have been present in the trading room for weeks. Trend inception reversal zone played out for weeks. This is a chart you can apply to any chart you choose to trade. Agree? So, first support is out, this is next support. Do not short near. If price is chopping here to here, we have a problem. Do not short near. Again and again and again. Pretty please. Bad idea. So, if price is here, much better place to short from. Higher the price is, better off your short will be. Agree? But if price dancing in indecision, do not touch the market. So, as a knowledgeable day trader, you are adding daily charts to your trade decisions. This is a brick wall. This is the end of the minor trend where S&P been dancing for the last 3 weeks, all present in front of you for months. And again, where a buyer stepped in from is no surprise. At the close of 2018 trend inception. And since we have 3 more minutes before FOMC, let's take a look on even larger time frames. Because if you trade with institutions and not against them, you are in excellent shape because you are trading with spectacular volume. So, this is daily chart, option traders' favorite chart. Trend inception and the end of the minor trend, trend resistance. Price had been here for the last 3 weeks, all present in front of you since last year. Can remain in a play for months and months to come. You're using this daily chart, you're holding position for a couple of days, a couple of weeks. Hardly ever you holding your position for months if you're using daily. However, if you are an investor, you utilize exact same rules, exact same strategies to long-term decision-making process. This is exact same formula on institutional charts at the start of the rally 2016. When price struggled at 2200 for months. This is a chart 2014, 2015, 2016 that's showing you the end of the minor trend is out. What will follow next? Shock or not, decision point 2. Did it play out night of the election? Of course. Buyers stepped in with vengeance and bullish rally skyrocketed. And this is what played out at the start of 2018 when markets started selling off. And what do you see in a play for the last months? Buyers keep stepping in from exact same support that prior was exact same resistance. Absolutely no surprise, none whatsoever. This is a chart now in 2019. Let's go to the news traders and see if the news is out. Buyers stepped in on institutional chart from key support, bullish rally overextended. Level present in the trading room for years is where institutional volume stepped in. And this is exact same level in a play in front of you on any day trading chart you trade, just like on weekly. FOMC leaves target rate unchanged. No surprise, as expected. key Fibonacci support, just like on weekly, in a play in front of you right now, as we discussed before FOMC. If I convert this chart to 1, would you like to see what played out? Anyone surprised? Shock or not, it's all the same, just like on weekly. Not the place to short. And what the price will do next at reversal zone is crucial. Knowledgeable day trader not touching this. Agree? So, what do we need for the price to do? We need for the price to retrace as low as possible, to monitor for long as low as possible. If you start and choose to buy here, you will get a whole lot of pain. Agree on that? And that's the reason price is indecision. It reached brick wall. Shock or not, as expected. It never gets sold. Spectacular bullish news doesn't mean a thing. Fibonacci reversal zone means everything. Anyone surprised? Just like on weekly. If I convert this chart to 5, is it the exact same formula? Of course, all present in front of you for weeks. Never get sold, I promise. Market is flawless Fibonacci puzzle. Using anything else is afterthought. What else did we discuss in mastery course with students pre-market? If price is not selling off, if price is holding this support, market not crashing through, what are we expecting next? If this bullish rally skyrockets and price is not crashing through, we're dealing with trending bullish rally. Least favorite because it has 20% success rate. Ranging market 80%, as it's done for the previous 4 weeks. And if price skyrocketing right now, and you choose to buy, you're extremely aggressive trader. Because knowledgeable trader buys as low as possible. Do you remember this on Monday? Do you remember this on Tuesday? Do you remember this morning before FOMC? Buy at support. Support respected right before FOMC. Everyone clear on this? Thank you. Ultimate point of entry at trend inception. And this is music to my ears when my students agree. When my students agree. Music to my ears. So in 2007, I recognized very, very clearly 90% of traders chasing indicators, 90% of traders, only human, want an easy solution to their problems, wants to push a button and print money. How did it work? If it doesn't work, it's no surprise. It's simply a powerful marketing machine that shows easy to make money. When in fact, market is flawless Fibonacci puzzle. And when I removed all the indicators from the charts, I recognized there is no easy solution in trading. The only one is to pay attention to pure price. And remember that price does exact same patterns no matter what you trade. And if you choose to buy at reversal zone, you get a lot of pain. Clear on that? Only when you start giving respect to the markets, only if you start playing by the rules, the sky is the limit. Every single thing in life that creates success requires effort. Go to the source and what price developed after. We expected this Fibonacci support to be respected. We expected problem at reversal zone. And if you see this, you are not surprised. Not whatsoever. Market in pain. Clear on that? Look at that. Spectacular bullish news and market collapsing. Again and again and again. If I will bring up to your attention a very powerful reminder. What another instrument that had done that? Let me remind you. This was Apple in 2016-18. Do you remember this? My goodness. 3 months of pain. Where's the poor Apple now? Collapsed, went into free fall. If there's a reason buyers stepping in, of course. All spelled out, year in advance. Spectacular earnings don't mean a thing. Fibonacci reversal zone mean everything. Rates are not raised? Who cares? It's a reversal zone. If you choose to buy here, what happens? Pain and torture. Best case scenario. So my goodness, shocker, it's a bait. I keep warning you. This is proprietary Fibonacci tool you can install on any platform, any instrument, any time frame you choose to trade. You learn the settings, you learn the rules, and you apply the strategies you learn. In Foundations course, we start with basics. In Mastery Group course, you progress to many more other price action and Fibonacci formations. There is no limit to how much I can teach you. Students start with minimum and keep progressing non-stop. So, choice is yours. Do you want to trade on MT4? Do you want to trade on Thinkorswim? Do you want to trade on TradeStation, Ameritrade, Ninja? Do you want to trade ETFs? Do you want to trade pot stocks? Do you want to trade cryptocurrency? Of course. You decide. Do you want to trade 5 minutes? Do you want to trade 15? Do you want to trade monthly, weekly? Of course. Exact same Fibonacci support on day trading chart at the time of release on FOMC is what played out on S&P in 2016. Your investment decisions. 1800 number that's shown you, 2800 will be a problem. How many years did it take S&P to reach 2800? It's your investment decisions. Here is S&P 2 years later. No surprise. Not the place to buy. Shock or not. And that's exact same on Apple, as you saw. Do you want to trade your trade 5 minute, 3 minute, 15 minute? Choice is yours. Do you want to trade Amazon? Why not? It's all the same. So while we're waiting on Amazon, on Apple, let's look on other stocks. This is Amazon traders. Yes, everyone seeing 2000 ahead of you? This is Amazon, the start of 2018. This is Amazon 40 weeks later. By the end of 2018, 2000 number, anyone surprised? Spectacular earnings don't mean a thing. Fibonacci reversal zone mean everything. Fibonacci reversals identified a year in advance reached, and Amazon sold off. No surprise. That's what price does 80+% of the time. Agree? So this is exact information on S&P right now that we discussed with students in Mastery. This brutal crawl on S&P in a progress. I convert every single chart to 1 minute so you can see. This is exact same thing Amazon had done at the start of 2018. What is the problem with this trade versus what played out in the trading room even this morning? Market extremely high. It's a pain. Where was much better place to be? To remind you, trend inception. January 22nd, 23rd, 28th, 29th even this morning. Much better place. This is so pretty darn high. And that's the reason for this crawl. And that's the reason for this pain knowledgeable trader does not touch. Every single trade you choose, you ask yourself a question. What is my highest probability versus my lowest possibility? Plenty and plenty of trades across the board. Trader who chose to take this will not be successful long term. Scoring a lucky point, patting himself on the shoulder. Not the way to trade. If you're buying this high, that's the reason you are in pain. Buy as low as possible, sell as high as possible. Market extremely high, traders. Price is heading to 2700. It doesn't matter. This is a test. This is how your greed and ego gets tested every single day. We are extremely high. Buy at trend inception, buy at key support. And if you want to touch this, you are in pain. Spectacular bullish news, but only crawl is on. Knowledgeable trader not touching this. So if price collapses completely, it's a beautiful news. Knowledgeable trader pass test of greed and ego. And that's a test you must pass every day. Do not touch this. There's a big difference between spectacular way to trade and brutal way to catch an extra point. Which one is it you want to do? Painless way or painful one? Choice is yours. Agree? Simple. Choose your trade carefully. Do not be in pain. Exact same place where S&P is, exact same place we're warning you. Overextended bullish rally that started from institutional trend inception this week at the bare minimum 2620 extremely high. If you choose to buy this high, this is a reason for pain. And while we're waiting on S&P, and we've been here the last half an hour, take a look what price does at reversal zone. Time and time again. This is gold. For the last 2 years, this is your investment decisions. Shock or not, where gold sold off from 2018, 2017, 2016. Shock or not, where bullish rally had started from, as hedge fund manager in the course taken advantage of this. Choice is yours what you want to trade. Do you know what to do with gold next? Gold is not far off from exact same place it crashed from, which price does 80+% of the time. Do you want to trade gold and hold for weeks and months and years? Choice is yours. This is a reason for S&P to be in pain, just like gold. And here is Tesla. Start of 2018, poor Tesla. Sold off from reversal zone, reached famous Fibonacci support. Doesn't matter if mask smoking pot or not, Tesla keeps respecting exact same support 40 weeks later. Boom, shock or not. Market is flawless Fibonacci puzzle. 12 years of work with price action and Fibonacci. That's the reason you don't wanna touch this. Are you clear why S&P retracing? We are at reversal zone. It would be such a beautiful news if price will collapse. Rates are not raised. The knowledgeable trader knows. Do not touch this. Don't choose a pain. And that makes a world of difference. Here is Tesla today. Chart present in front of you for years at exact same support where Tesla was a year ago. Do not short. Doesn't matter how spectacular production is, or how cheap the cars are, or what Elon Musk smokes. The only thing that matters is market is flawless Fibonacci puzzle. Everything else background noise. Don't touch this. If you do, pain and torture. Best case scenario. And here's VIX in exact same place as Tesla. Selling off? No surprise. Reversals are not the place to buy. So, let's convert this chart to one so you can see what we discussed before FOMC. Look at that. What a pain. What a torture. If you choose to buy this high, this is what you get. Buy as low as possible, sell as high as possible. Spectacular news doesn't mean a thing. Fibonacci reversal zone mean everything. So we're watching S&P in excruciating pain as we discussed. If you choose to buy at reversal zone, this is what you get. Best case scenario, pain and torture. 30 minutes later, price did everything we expected. Price respected support and doing absolutely nothing except chopping in bearish correction at reversal zone. As again, Fibonacci level identified weeks in advance, reminding you, if you choose to buy this high, this is what you get. Nothing good is possible. But if you choose to buy at trend inception, you are in beautiful place to be. Never into trend reversal. If you do, success rate less than 20%. Cannot touch this. And price remains frozen here in bearish correction. Nothing here for knowledgeable trader to do. And that's the key. So, if you would like to join us in any of the courses, pretty please review the information on the website. In Foundations course, you master foundations of the method. In Mastery course, you master much more. You master pure price, you master Fibonacci, you master trend inception, trend reversal. 12-week course, I'm with students 4 days a week. All classes recorded. Trading room included. If you would like to join us in private mentoring, all group courses recorded. all group courses included, and I work with you one-on-one. Pretty please contact me to discuss details. Right now in private mentoring, I have students who trading with few $1,000 account as day traders to hedge fund manager who trading 7-8 figure accounts. From stocks to options to Forex, to ETFs to cryptocurrencies. Anything you choose to trade, choice is yours. If you would like to stop and restart the course, not a problem. Price is doing nothing. Price is frozen, chopping as expected. Trader who chose to touch this is in serious pain. Don't choose pain. Don't choose torture. Don't buy too high. Understand extremely well. Only if you buy as low as possible. Only if you play by the rules, the skies are the limit. Pain and torture, never ever ever recipe for success. Trend inception, ultimate place to be. Trend exhaustion and bullish news is a problem. Don't choose pain and torture. Bullish rally started days before. That's the reason market in so much pain. And that's the reason market doing this now, reminding you. Only if you conquer greed and ego you will succeed. And if you understand and know where long-term Fibonacci reversal zone is, you never enter trend position near. If you do, success rate less than 20%. If you do, best case scenario, pain and torture. So for reminder of the market close, price will do this and chop back and forth. What is this? This is broker's heaven. This is when broker printing money. This is when knowledgeable trader not touching this. It was a very different case scenario in the trading room this morning. Do you remember this? Key support. Exit on short, entry on long. Not here. Agree? And if S&P goes into complete free fall, what are you reminded again? Being a follower in day trading never a recipe for success. Knowledge, however, is. Don't be 90%. Don't chase the markets. Don't schlep random trades. Don't grow your broker's account. Grow yours. Recipe for success remains the same. Focus, effort, and discipline. Exact same recipe, no matter what you do. That's what Tom Brady had done to get to another Super Bowl again. He didn't play video games. He actually sweated and worked hard. That's the exact same formula in trading. It doesn't come from pushing buttons. It doesn't come from printing money. It comes from understanding when it is crucial to stay out, when it is crucial not to choose pain. Overextended markets, the worst place to be. Spectacular bullish news doesn't mean a thing if price is at reversal zone. So, if you choose pain and torture, look at this. This trade had been here for the last 40 minutes. Do you want this? Or do you want pain-free trading? If you want pain-free trading, you don't need this. So this is Brad's email to me a couple of days ago. As you know, we've been dealing with incredibly slow and very choppy markets. What makes Brad different than 90%? He's making a serious effort. And this is where he is this morning. Hopefully one day he can take a mic, he can share with you how he's making an effort. So, I warned you, don't touch this. Bullish rally overextended. Don't choose the pain. Don't choose torture. Spectacular news doesn't mean a thing. Fibonacci reversal zone mean everything. If you choose to buy, this is what you get. Don't choose pain. Don't choose greed. Choose knowledge. That's the only choice after FOMC. Not to touch this. If you do, the only option is pain. If you don't like pain, you buy as low as possible. If you don't like pain, you sell as high as possible. Only if rules are met. Market incredibly high, but there is no shorts. We are at reversal zone, but there is no shorts. Market simply in pain. Spectacular news doesn't mean a thing. Massive chop means everything. The only option not to touch this. And this is a market for the last 2 weeks. Flawless ranging market. Respecting Fibonacci reversal zone. Every day, every time. So, you want to play by the rules? I look forward to working with you. Listen to students, listen to graduates. Many more testimonials coming every single day. One of these days I will scan thousands and thousands emails I received throughout the years. If Brett can do it, if Pablo can do it, if Lee can do it, if Lisa can do it, if Herman can do it, so can anyone. All of these people in the course now. Choice is yours, what you want to trade. Any questions? Do not hesitate to contact me 925-257-4298 or send us a form from the website, and I will always get back to you. Pain remains. Nothing here for knowledgeable trader to do. So, don't choose pain, don't choose torture. Don't buy randomly on the news. Don't be 90%. Only if rules are met, you can take a trade. Just like Apple, S&P is crashing. Shock or not, bullish news doesn't mean a thing. Just like Tesla, S&P is crashing. Just like Amazon, bullish news doesn't mean a thing. Fibonacci reversal zone means a whole lot more. And here we are an hour later. Do you want to babysit this? Nothing else is possible. We are at reversal zone. If you choose to touch this, best case scenario, pain. And so here we are, 4 hours after FOMC, and this is what the price had done. Not going anywhere. Stuck in this range despite very bullish news. Why? Simple. Reversal zone blocking it. So if you would like to master where to enter, where to exit using the rules, I look forward working with you.